Hi, this is Randy Finney with Right Side of the Chart. This is an early session update for Friday, January 13th, 2023. What I'm going to do in here is a quick update on some of the trade ideas, and it includes the equity markets. I want to touch on a couple commodities, natural gas, lumber, I want to point out, and maybe gold and silver and the dollar. Sometimes I get into these videos, if they go too long, then I'll just truncate it and cover the rest of the securities elsewhere. But I want to do something, start out with something a little bit different. From time to time, I like to loop back and look at the questions. I want to say that I greatly appreciate the questions put to me in the comment section on the home page. Yeah, I appreciate and welcome differing opinions. I might miss something sometimes, or maybe I'm just kind of biased one way or another. So I welcome any feedback, positive or constructive criticism, and any questions that you have. And then if you have any question on the site, there's a good chance somebody else has it. So I want to start there and just cover just talk about a couple questions that were put to me today. So, this one came this morning. Couldn't get the reversal trades out by the time it was posted. NQ was blah blah blah, 40 points. Okay, first of all, uh, well, my reply here. Yes, I can and did do one better. That trade was posted yesterday, so that was on this 15-minute chart. That's why I give you these charts. I work very, very hard to not provide hindsight analysis unless there is a takeaway, a lesson learned. I messed up, I missed something, or even did something right. I'll highlight that. Because part of what this site is as much as anything education. I'm sharing what I do. I am a professional trader. I've been doing that for gosh, well over 15 years now. That's how I make my living, and I share what I see. And there's all kinds of skill sets and levels, experience levels on the site. I know that, and so what I try to do, again, to my best, is give you what I call trade setups, either actionable trade ideas right away. Hey, I'm selling this, going along here, but I will try to put those out in advance. So, for that example, this was yesterday's post, and I give the link to it. It was right down here. This is the right there, that one from the pullback trade, and there were the pullback targets if you're trading NQ. Arrow breaks denote where you're going to get a reaction. I can't possibly draw out each and every one, and plus, you kind of gauge a bounce as it comes. But this morning I gave you where it's targeting, give a little line like that, and so that's that. And so again, that's what arrow breaks are. That's what each target is. I wouldn't list multiple targets if I didn't think there was a reaction. So every time I list multiple price targets, it's a level where a reaction is likely upon the initial tag. That means if it's a downtrend, a drop, a short trade, the first hit of it, you're likely to get a target. If there's multiple additional targets, there's a decent chance. And I'll let you know, I always say this, the charts are dynamic. They're constantly changing day by day, minute by minute, even on the shortest term time frame, second by second. Therefore, my analysis is dynamic, my trading plan. So that's kind of the rough sketch. Things get ugly. Right now, I still favor a little more downside, and I favor a red close today. We're pushing back. We're only slightly negative now as I talk. I can see at least the futures are down. Well, QQQ is down 0.16%. We've had five consecutive green closes in the Nasdaq 100. That's something we have not seen in over a year. It was not at, highlighted that the other day. Throughout the entire bear market since it started, around the beginning of last year, we didn't have a single time a period where the Nasdaq 100 had four green closes. Now we have five. So, and again, just the fact that we had five in itself doesn't make the odds say we're going to have a red close, but what does, I'm going to get to in a second, divergences, resistance. But I wanted to say that these things, I do my best to get them out in advance. And then again, I don't mind, hey, can you update, trade? Do you still think that trade looks that way that you posted last time? I know I can't possibly follow up on each and everything all the time. Your inbox will be inundated, and guess what? My trading would suffer. I do my best to get things out to you timely. I can't share every single thing I'm trading, every trade I do. And then most importantly, and this is what I want to loop back to that post. Most importantly, actually, this ties in with the second comment here. Let me go down. That was the bounce targets there. UNG, I'll get to UNG in a second. And then this one here, and again, I'm not trying to single anyone out, just this is a great example, and I really want to talk on this. So we went short, or you remember, well, you guys do what you want. I'm providing analysis. You're going to agree, not agree on, and the only guarantee I'll ever give you is I'm going to be wrong. I'm going to be wrong a lot. So just take my analysis, marry it with your own. And maybe that of others, whatever, and then you decide whether to take the trades or not. But here's what I wanted to talk about, and this is very important. So I go on to say I stated in the final video, and I think it was the last one I did yesterday, um, that regarding the stock indexes, remember there's different trades, I'll talk on that in a second, that I have moved away from swing trading mode, and that was to define that, in other words, at the bottom of those trading ranges. I first mentioned when we were in those what I call the Christmas trading ranges, I first started buying a couple market leading tech stocks as hedges to the shorts, and then I went on while we're at the bottom range to tell you I decided to remove or cover all my shorts, swing shorts, and then go long for the reasons I stated. So that was swing trading mode, and I gave you the 280 QQQ target, saying that was my final bounce target, and that's what we hit yesterday. So that was swing trade mode for me. Um, and yes, and sometimes, quite often, I'll supplement swing trades with some active trades, some day trades. But for the most part, that was swing trades. Um, so I was swing trading up to those price targets that were hit yesterday, and then I went into active trading mode, as I stated, because I suspect that the markets or the indexes, the stock indexes, will be more conducive to active trading. That means both long and short, in and out. What is active trading? Well, sometimes, many times for me, it's day trades in and out. Sometimes I can do, flip the cues, half dozen times or more in a single day, long, short, and that's just me. And I can't possibly put all those trades out. They happen so fast. I'm trading off 5-minute time frames, sometimes even 1-minute time frames. You can't follow a day trader. It'd be like trying to learn football and following Tom Brady in the field during the game. He says, mirror every step that I make and everything I do. You can't do it. But the same premises that apply to swing trading and even long-term investing, same charts, trend line breaks, support and resistance, volume patterns, things like that, they apply. They work equally well in the shorter term time frames. You just have to kind of cut your teeth on, start out, learn the basics, learn chart reading, technical analysis, swing trading, trend trading, and then you can kind of, if you have that inclination and the time to focus, it takes a hyper focus to actively trade and day trade. All right, and let me finish what I was saying here. So I made it clear that I've morphed into active trading mode, and that's for the time being. I don't know how long that's going to be, but I suspect it'll be at least in the very near term, days to possibly weeks. And again, so I think the markets will grind around. And here's what I went on to say, and here's why. While we've had some very bullish developments on the 60-minute and daily charts in recent weeks, we are still in a bear market by nearly all metrics. Keep that in mind. So that takes those bullish setups and developments, you take them a little bit of grain of salt. Plus, there is very significant resistance overhead with the indexes, which are somewhat overbought in the near term. Okay, so what does all that mean? So yes, we had a bullish setup, but we milked a good part. We milked a nice rally, or at least I did. I think the upside at this point is somewhat limited, and I made that clear yesterday. The risk reward is not very attractive. That doesn't mean we have to plunge down, but the indexes will probably start to digest some of those gains. And again, we could go up a little more. The resistance I'm talking about, again, was covered ad nauseum yesterday and recently, the 200-day moving averages, the primary downtrend lines, price resistance, everything else. Okay, so that makes it now my translations, we're likely to see some back and forth swings that could be profitable for experienced and nimble active traders, while typical swing and trend traders are likely to get frustrated by the back and forth grind if that's what we get. Okay, so what I work very hard to do, I know I can't be all things to all people, nobody can, but I do my best, and maybe sometimes not enough. I'm very wordy, and these videos go a long time, but I try to differentiate and make clear when something is a swing or a trend trade and might fit if that's what you are. And again, if you're new to investing in swing trading, don't try to start day trading. The analogy I can give you, let's say you walk into a Taekwondo studio and maybe you took lessons as a kid or you watched kung fu movies on TV or whatever, and the instructor says, "Oh, what's your level?" And because of your ego, you say, I don't want to be in the intermediate class. I put me in the advanced class." Well, what's going to happen is you're going to get your butt kicked in the sparring rounds. You need to, if you don't have the skill set and experience, you have to start out with the basics, and then you have to learn to walk before you can run, right? And so that's the same way here. So if this is not your wheelhouse, active trading, ignore posts. If you see me post something on a 5-15 minute time frame, ignore it. If you're a swing trader, really focus on those 60-minute to daily, but keep an eye on the weekly charts. And so that's the takeaway here, is that I'm going to post what I'm doing, what I'm seeing, and again, listen to, or I'll do my best to communicate. And if I don't, ask, hey, is this something, can you expand on that? And I'll let you know. Oh, it's a short-term trade, don't worry about it. Kind of an in and out thing. So there's, let me get to the charts now, and we'll try to cover this. So there it is. Again, that was resistance hit yesterday. There's the pullback. There's the 5 days right here. 1, 2, 3, 4, 5 green candles. And look, you have price resistance there. The Qs do have quite a bit of room. And I still think the risk reward is best. I like that. I think we're going to see. I'm very excited about this bear market, by the way, and I think I hope we stay in it for years to come for my own selfish reasons, because that's my kind of market, and not just a bear market. There are going to be a lot like this, a lot of bullish opportunities, a lot of long side, but we're finally we've clearly gotten away from what the trend was for over a decade now, where everything moved up in unison, all sectors, bonds, everything just kind of went up when the Fed kept that zero interest rate policy, quantitative easing, pumping money into the economy, and then Washington hit with more stimulus. Everything went up, and and everybody thought they were a genius. There's an old saying: never confuse a bull market with genius on your part, because everything goes up. If you buy at the absolute worst times in a bull market, you get bailed out. In a bear market, I can't say the same about shorting all the time, because the bear market rallies are so powerful that if you don't have your timing isn't good, and you are shorting at the wrong times, the squeezes are so powerful, you're going to get stopped out. I've always said there's in my book, a difference of being wrong and early. There's a big difference. When I am early on a trade, for example, I told you back here, somewhere in there, I removed all my, covered my swing shorts and went long, decided to change that bias, and that was a little bit early. I would have been wrong if I would have been stopped out. That's wrong. Early, get in, and even if it took another month and then it played out, that is being correct. That's just being early. Nailing it as getting the day, hit the bottom and then moving up. So, all right. Anyway, that's the takeaway is, I'll do my best to make clear what trades are good for what time frames and what kind of traders and what kind of market conditions I'm expecting, because that's something I've learned over the years. It takes a while to kind of almost try to do your best to foresee or recognize either when you're in a trading range or when you're likely to be in a period of consolidation or back and forth. And then that helps to formulate, okay, what are you going to do in a trading range? Well, the MO, or at least early on, is to game the range. Go long at the bottom of the range, sell the top of the range, and or go short. But then there comes a point where you need to stop doing that and start expecting that range is going to break one way or the other and then react. And that's kind of what we did. And so and based on the divergences, that's what told us we're likely to break to the upside of the, and not just the divergences, everything else. Okay, so based on this, remember the Qs are strong. We're seeing the market leaders catch a bid, and that is certainly a potential there. I see it pretty unlikely. There was a big trading range here, and Now we're at the bottom of that trading range. That was support. Support once broken becomes resistance, and everything else. So let me get back to the short-term charts. This is the one I gave you. No, I gave you a 15-minute. Let me see if I have it here. There it is. This is the one I posted yesterday and showed you these are the potential targets. It's more of a zone. The second, that's where I had the second arrow break, max pullback target. So that was a fade, and again, laid out in advance. That's where you would have wanted to cover, and we were down. I think it was over 1% at the time, coming off the heels of such bullish price action. You're usually not going to go from 5 green candles to a 3% down move without at least dip buyers coming in. So what's happening now? I expect the reason I reversed. Those that didn't want to buy here, or even on the breakout, they want to buy it now because they see Apple and Amazon and Microsoft going up. They see in the media tell them the NASDAQ was up 5 days in a row. As I told you yesterday, because that's when all of a sudden all the masses want to buy, that's usually when I want to sell, especially after a run. And so they're going to, and they did. They dip bought, and you can see we're at resistance right now. So I showed you a target this morning. Just arrows drawn up to right here, a little uptrend line right there, and we overshot it slightly, and I added, in fact, I like it here. I'm going to pause and add a little more to my shorts. Okay, that pause took a little longer than expected right when I paused the video to add to those shorts. Power went out, and apparently I must not have plugged the Wi-Fi router into the proper port on my UPS. That's
Market
a universal
data connection re-established.
Backup power thing. So anyway, I lost connection for a minute. I gotta fix that. Back online now, and there it is. So here it is. You can have a pretty nice resistance here on NQ, and I already showed you resistance on QQQ. So yes, there's a bullish backdrop and a bias right now, folks to buy longs. But again, I think we'll pretty sure we'll close the day red today. So gonna short, and that's the way it works now. Is that that was a support before, had a level there because we had a reaction high, and then mainly that with a little bit of, now it's even further validated, so that if you're an active trader, that was a 1% bounce, or a little more than 1%. I think it was about 1.2, 1.25%. And now the way this works is if we do get rejected here, that's a likely target. So even if you're an active trader, you get 1% and then do it again. You take that all day long, because when you day trade, typically you take a much larger position size. You don't have overnight risk. Even if you're trading the Qs, there's no overnight risk. So you take a little heavier position than you would, or quite a bit heavier, at least for me, than swing trading. Anyway, that's that. And then the fact we've already had a reaction there once increases the odds that if we go back down, we could break that. And that would take us down to that next support zone, target zone there. And we'll see what the charts look like, and then that's where you go down to the very short-term charts. We go to the 5-minute charts and look for things like PPO crossovers. Okay, I just stopped the video again. Another brownout. That's common down here in South Florida, Southwest Florida. And especially, I guess, after the hurricane, they must not have fully rebuilt our grid. It's raining today for the first time in a while, and so several times the power just quickly went out, and then, like I said, my router keeps resetting. I'll have to fix that with the plugging it into the right port in the battery backup system. So my apologies, guys. Scott, I had to stop and keep. I went to tether off my cell phone. That's always a quick backup plan when you lose internet. So we're back online here, and anyway, that's so I showed you a level there. Let me continue on to the other things here. Let's start with what I was covering earlier. Going over the questions.
Connection lost.
And here was one on natural gas. What are your thoughts on UNG today? So my reply was, my thoughts are the same. Natural gas is at long-term support, most likely pounding out a bottom. As long as it remains in the long-term support zone, which is the one I gave you when I laid that trade out there last week on the nat gas daily / weekly charts, I think the RR, or risk reward, remains skewed to the long side despite the recent powerful downtrend. Also, while it might not be going up yet, it has pretty much stopped going down, which means that the momentum indicators are turning up. So let's explain that. All right, we go to the chart of natural gas. This is the Nat gas daily chart. These are the continuous contracts. This is how they show it on stockcharts.com. Now they only give you an end of day. Of course, I have streaming charts for the futures from other platforms, but
Market data
uh,
connection
this is
reestablished.
at long-term support resistance zone. You have a lot of reactions going back for many years. This is 2010, 2011. You can see a bottom of the zone with support there, traded around it
Market
there.
data
That was
connection
resistance,
reestablished.
resistance there. Another tag at the top of the zone. Two tags at the bottom of the zone. Pulled back,
Market data
tested the top.
connection
Okay, so
reestablished.
that's why it's a zone, because I have reactions at the top and bottom. We're in that zone now, so we've fallen very sharply. Nat gas has come down from 10 to down to 350, so it's more than cut in half, well over 50% drop down to support. It's not a screaming buy on this chart, and again, it's not really a scream buy. It was an objective long entry. But it's still a buy, and as long as it remains in that the long-term support zone, I like it. And so this is an example of a swing trade. I'm in swing trade mode on this, not active trading mode. And then when you go down to the shorter-term charts, and NG, let me find that. That's in Q. NG, where is that? Here we go. NG, there it is. No, what's happening here? It's clicking on the NG chart. Oh, I have the two. I have the March up, and then the February. I think it's what I'm trading, and the March is popping up in a different window as I click on it. Let me get the current contract. Okay, here it is, the February contract, and there's our price channel we had that we broke out of here. Ran up. Positive divergence, continue at that recent low, popped up. Then I gave you the other day R1 and R2, meaning resistance 1, first resistance, second. We got rejected at R1, so that's still, nothing's changed. We have positive, aka bullish divergence here on the 60-minute time frame while we're at long-term support. So the initial buy was the fact we were at long-term support. There was a secondary breakout and the back test of that level. And again, I think I told you the other day, it would be prudent to have stops below the recent lows. And so that's it. Now you can scale out if you're a longer term swing or trend trader. Maybe wait for a daily close below that trading range I gave you there. Or wait to add on breaks above R1. That would increase the odds pretty good, and then break above R2 would very, very strongly increase the odds we're going to go on to hit any or all of these price targets there. So really no change, but you're welcome to ask. I won't cover. I don't always do frequent updates on trades that are kind of going nowhere. So this one really hasn't changed. We're trading, and again, this is what I talked about, how the momentum indicators will turn up when something's going down. You don't have to just turn around and go up to turn the momentum indicators up. All you have to do is stop going down, because the momentum has now slowed and shifted. And so I'll go back to that nat gas. Let's go to for example, let's look at UNG. I'll show you something. UNG. So UNG, let me move that line. UNG does its best to track nat gas, but it's not perfect because it's an ETN. But what you can see here is the PPO is curling up, right? There's a PPO is a momentum indicator curling up. It hasn't crossed, but it's starting to curl up. And when you look at it, last time we had a bullish cross was right here. I meant to do an arrow tool, and it showed that uptrend there. But that came after a small hill. I like these big green hills. This is a red. That was a sell signal there after that big green hill. And here you had a big green hill. You had a little whipsaw there, but then when you finally got the cross there, these are momentum, trend changes. There was a big red hill right there, and then boom, it crossed over there. So if and when we cross over, that's going to be a pretty good buy, and that will be. This is a daily chart, so this indicator, I've covered this quite often in the past. It's a pretty useful indicator. The bullish and bearish crossovers on UNG. So that has nothing to do with day trading. This would be a further confirmation of a trend change if we get the bullish crossover on the PPO. It's got a little way to go, and you can also do that on natural gas futures. Where was I? I was back here. You can go to a daily chart. Here, you can see it here. Here's the futures. There's a daily chart. There's the PPO curling up, but still hasn't turned up yet all the way, but it's starting to flatten out. and there was a bullish crossover, and that told you their trend had changed, and there was a nice rally to come. That was well into the double digits. And then there's a great example of how the PPO, as a trend indicator, the signal line, the white line, will act as support and resistance. Sometimes it looks like you're going to cross and the lines kiss and it keeps the trend. It got rejected and it kept this downtrend. There was your sell signal. There was your bearish cross right there. And all along, it didn't tell you, hey, you have a bullish cross to right here. It got rejected there. There was a rejection once the trend change went bullish right here. And you had a little correction, but slight whipsaw, but then you stayed bullish to the highs. So again, it works pretty well. These trend indicators, don't use them when you get into a grindy sideways market. Natural gas is usually going up or down, but when you see these lines flatten out, that's when you're going to get more whipsaws. I say stay away. Look for the clean separation in the PPO lines if you can incorporate that into your swing or trend trading. Okay, next up here, this is lumber. So remember, I keep talking about this, that at least my belief, and by most metrics, we're still in a early stage bull market in commodities. And lumber is right up there with natural gas as being about one of the most volatile commodities, one of the most volatile securities for that fact that you can trade. And like natural gas, it does have its periods of consolidations, but it's usually going one way or the other. There's really not a lot in between. This sucker is usually either going up or going down. So it makes it a great trading vehicle, but it can also be, and this is another takeaway, this is a comment I replied to maybe 2 days ago about natural gas. It can be, you call natural gas the widowmaker, call lumber the widowmaker. If you don't know what you're doing, if you're new to this, when you trade something that regularly goes up high single digits to double digits in a single day, and that is natural gas, and then can do it day after day after day, that can drop, the trends, the little micro trends over periods of just weeks or months are quite often 30 to 50% or more natural gas. So you need to understand, if you're going to trade something so volatile that moves so much, Bitcoin and Ethereum are a great example. You need to understand that you have to take your position size down significantly. And it doesn't take a lot. I always say this, if your number, and again, everyone's different. Maybe you trade 10,000 normally in SPY, or 100 grand or a million, whatever your number is. Take a fraction of that into Bitcoin or natural gas, because you don't need that much money. If you're going to target 20-30% gains, then you're doing very well, and you can do that with a lot less money. So with that being said, lumber, same thing, and you can see it trades very well with technicals. That was a big old divergent high. You get these parabolic moves. I've highlighted these, and all these moves were highlighted in the past. You get these big corrections. That one, you had a very steep and well-defined downtrend line, bullish falling wedge. My favorites things such as divergent lows, positive bullish divergence. And these are the trends, and they're big trends. I mean, this one, look at the price. This is log scaling. From that breakout there, it was about $450 lumber futures. We went up to about $1,350 or so. And then what happened? You had a little bearish rising wedge with some negative divergence that said, hey, sell signal, get out, go short, and that was the next trend. And here we are. We're back down to, this is a long-term support zone with, clear out all the lines. These are the lines I had on there already. Look at that nice clean downtrend line. We're pushing up here. So yes, I know the housing market is really hitting the skids here due to high interest rates, but doesn't matter. This is saying lumber looks pretty attractive here, and this is on the daily chart. If it breaks that, it's at trendline resistance right now, but I just wanted to show you. So this is something else that you can consider, and you can see the divergences here on the shorter term time frame. And then of course you have lumber futures, or LB, and then they have the new smaller contract out. I haven't traded that, so I have lumber at resistance right now if you wouldn't want to buy it right. And well, I'm sorry, I showed you resistance on the daily chart. This is also the 60-minute chart, my hourly chart at LB. And I'm sharing this as a trade idea, and this one's not actionable right now because you're at resistance. In fact, if the only actionable trade is a pullback here, you're a downtrend line, so I will share it as an actionable trade. I take that back. We are at nice resistance. We have negative divergence here. Let me draw it out. Let me change my line tool here, color that up. There's your divergent high, negative divergence, 60-minute chart. And we'll probably pull back to, I'm going to add one more level here. I think that's where we'll pull back to, right about there. 400, just over the 400 level. So, and so let me add those lines back here on my chart. All right, sorry, another pause of the video there. I am a proud owner of an initial scale-in initial lot on a short trade for that. I had that line. I was intending to short it there, and today I've been so busy on getting all these updates out to you and trading the equity markets long and short that I missed that entry there. But no, so it would have been a little better to get it right there. But still an objective short entry with an add-on to come on a break of the uptrend line right there. But again, longer term bullish. So this is another great example, you know, of what I'm talking about. I can be near-term bearish on something and longer or intermediate-term bullish, and that's what I try to convey in these videos. And that's why they go so long, and so lest it be confusing, because I get that a lot. Randy, what are you talking about? You're bullish on Apple and now you're shorting it. What's happening? And again, I can be bullish over the next few weeks or months or even year, but then gaming a short-term pullback trade. All right, that's that. Again, targets right there about 410 and 401. We'll call it right there, and then probably turn around and maybe even go long at that point, depending on how the charts look. But again, this will fan the flames of inflation if this starts going up. Nothing the housing market likes any better than super high interest rates and soaring lumber prices, right? Obviously being facetious there. So, all right, that's it. And there's that reversal on NQ. Remember that was in the video right when everything froze up. So that's the reversal. Let's get you to. It goes without saying that if this, if this plays out, we get some a decent correction going. I keep toggling between these time frames. Sorry for all the confusion. 60-minute chart. That crypto will most likely sell off, and it doesn't. It's not one little blip. If we get some traction to the downside, let's say we come on down here, or all the way to back test the top of the range in NQ, then that's when you'll see some profit taken on crypto, and it'll most certainly follow the market down. US dollar just a hair below that primary uptrend line right there. Still has the potential but unconfirmed positive divergence potential, because you need to have the PPO make a bullish crossover and turn back up. So this will either be a whipsaw and we'll move up, or maybe one last thrust down to that 12,628 level, and that again would put pressure on gold and silver. Euro US dollar, you can see the divergence continues to build. Big negative divergence there on this daily time frame. When I look at the 60-minute chart, you also have 60-minute divergence right there that could be the catalyst for a correction, just like you had positive, aka bullish divergence there. So watching that. There's our weekly chart on the Euro US dollar, and of course gold itself. Going back to the daily chart, still powering up today. Had a new, at least, yeah, well, obviously a new high over. I don't know if it's a 52 week. We have to go all the way back there, but powering up, and you can see it coming up on the next resistance line I have there, about 179.34. Silver still below the uptrend line, rising wedge pattern, and again, silver is only going to go down so far without its big brother gold correcting. So silver is once again an objective short entry, but again, until gold breaks down, until the dollar reverses, you're probably not going to see much downside in silver. But silver, you get more bang for your buck when trading that than gold, and so that's usually my go-to proxy. And I'll show you that 60-minute chart and what needs to happen if I can dig that up here, and then I think I'll wrap the video up. SI, where is my SI chart? Got it right here. And this is the hourly chart, 60-minute candlesticks on SI silver futures. There was our uptrend line, our bearish rising wedge. There was our breakdown. At the time I said gold hasn't broken down or given us any type of sell signals, nor the dollar yet, so probably get a back test, which we did. So that was your objective short entry. Bit aggressive because it's still in an uptrend, but right here, this is that level. You can see we have two lows here at about benefit of the doubt. You want to play it safe, wait for the latter two. But I think if we take out that first one, I'd say 23.30 or so. Take that out, and again, gold's going to have to reverse as well. So if you see that, the reversal in gold, then that silver, there's your play right there, short there. This is what gold looks like. It was moving up. You had an uptrend line here, and we have this, what appears to be a potential near-term blow-off top. When something's moving up in a pretty decent uptrend, and all of a sudden it just kind of starts to go parabolic like that, that's typically a sign of a buying climax. The volume really doesn't support that so much, I have to say, but with that being said, it's still, let me turn volume off. A little minor trend line there that could do the trick. No signs of reversal. That's what I want to say. So we're getting probably close to a pullback, and it all depends on the dollar. As long as the dollar is falling, that's bullish for gold. When the dollar starts to rally, then you'll see the brakes come on this trade. And that just about does it. I just want to rifle through the fangs before I leave. The market leading stocks. There's Apple. Apple is still, it actually is at, pulled back to uptrend line support just today. There's that bearish rising wedge on the 60-minute chart. And again, that can give us a deeper correction. Apple hit that resistance level. That was my initial target there to get out. Second target, but initial near-term target, 134.61. If it can break out, and if the market can just power through these resistance levels, which is certainly possible, then we'll head up to those uptrend lines in 200 days on QQQ, and that'll take Apple up here to that next potential target I gave you, about 138.50 to 140.50, and the downtrend lines you can see all coming together. This area here, more of a zone. We'll see, and of course watch if QQQ gets to those levels. So what it needs to do is power through, and if it can do that and take out these divergences, then that's going to be bullish. And but as of now, you have negative divergences and a little wedge pattern here at resistance, hence pullback. And that's where I'd be interested in buying back into Apple. On a pullback to 130.50 or so there. And the other ones, Microsoft, also at trendline support. So this is what you want to watch for today or next week. Today's Friday, so it may not happen. Break of that trend line on Apple, the wedge. Break of this trend line on Microsoft should bring it back 231.36. That would take the Qs down with it. Obviously, Alphabet hit that, ran right into that 91.83 level. And you still have the primary downtrend line. There it is, GOGL. Look at that beautiful downtrend line. It's a likely target. It's just a matter of, can it power on through there and run up there? If so, that would be a great area to exit some longs and or turn around and short. So to me, it's more of a matter right now of, are we going to get a pullback first? If we do, there's a gap down there to target. Amazon is at, and again, why I closed that one, that was my favorite off the bottom, made that very clear on multiple occasions. And that one rallied a total of about almost 20%. That's about 19% right into the downtrend line, and my whole target zone, resistance zone, 96.50 to 98 plus the downtrend line. It doesn't get any better than that. So again, this is where I'm at. Look, this is a lot of bullish activity here, but I think it's a little too much too quick. Come in, maybe consolidate, pull back. That's where I might be a buyer back into Amazon there at 90, a little above that 90.36 level. And if it can do that and hold above the lows, it may go on to power on and break through the uptrend line. If it broke above the uptrend line right now, what I think would happen, it would only go so far and then come in and back test it. So that would be maybe an objective entry if you get a breakout. I wouldn't chase a breakout today is what I'm trying to say. All right, and then the other one is Tesla. Tesla still looks good. on this 60-minute time frame. Doesn't look good on the daily and weekly. I'm going to tell you that now. But on the 60, we had the bullish falling wedge breakout right there, and then we entered this trading range we've been in. And so you can ping pong it there, long, short, or wait for a breakout, a solid breakout above it. But a breakout above this range is going nowhere without the Qs. So watch QQQ, watch SPY. If they break out and you get a breakout in Tesla, yeah, that'll probably take you to that next target and then that max potential target. If we get a rally here in the, we build on this gain and we can rally in January and maybe into February, yeah, that's a potential target for Tesla. But when you look at the daily chart, oh, I'm sorry. The daily's okay because we held that support. Remember, I had support here, and we had the bullish engulfing candle. So I should say that in itself, that's a potential bottoming stick. Oh, and there's also the trend line there. But the weekly chart, just, yeah, it's ugly because you don't have really good support. That's that support on the daily. It's minor support. This is a little bit better. And then ultimately, before this bear market's over, I think Tesla will come and visit its primary uptrend line, which is still a lot. So, we can get this, and that's a big rally. I mean, if you get that, run back at the 200-day moving averages, and ultimately, there'll be a time to get short Tesla again. It's not right now, I don't think. But all right, I'm going to wrap it up here, get the video out to you guys, and continue to look for some new trade ideas. This has been Randy Finney with Right Side of the Chart. Have a great day.